I have Steve Flanagan with me, an old and dear friend. Steve, thanks for coming on. I'd like you to introduce yourself. I know you've got a varied background. We spent probably 12 years together in various places over the years, but
That's right.
please introduce yourself and tell everybody what you've been up to.
Yep, and of course, the near and dear is working the night desk at what is presently JP Morgan.
Yeah,
We work the midnight shift until 7 in the morning.
yep, that
And
was a lot of special times there.
a lot of special times. How many hours of sleep did you get? 45 minutes.
And the classic, Steve, you got to take this bullet from me.
Yeah.
Rest his soul, Byron Lyons.
Oh boy, what a memory that one was. But so I started in 79, did a couple of years in letters of credit operations, jumped into currency trading early 82, and worked my way through the spot trading desk. Fred, you were on the forwards. Then, of course, we merged again back into spot. And um, about 1999, 2000, 2001 area, we closed the night desk, and I was given an opportunity to jump on to the trading desk during the days.
Yep.
And my boss basically said, you're getting a little bit slow. So she offered me a position to, at that point in time, we were doing $50 million a day on the electronic trading in 2002, 2003. So I saw what EBS had done to the voice brokers throughout 1990 and that era. So I figured, why not make this maybe a good opportunity for me? And from there until my retirement at 2022, so I did 43 years in total. I stayed
Wow.
with electronic trading and helped develop with a lot of really good, smart people the e-trading aspect of JP Morgan. I finished up my career as the global uh, risk manager for e-commerce, and we were doing probably 99% of all the tickets and probably about 90% of the volume. And, you
You did
know,
a great job in moving JP Morgan forward as one of the premier electronic platforms and liquidity providers globally. You were in the forefront of that, and I give you a lot of credit because
yeah,
when they had that move where we closed it down, I decided to move over to the prop desk with an interesting group, people that were trading commodities, people that were trading interest rates, myself on the FX side, and that lasted about a year because one of the guys took a big hickey in the interest rate portfolio, and he says, "All right, this isn't working." But there were a lot of smart people there. But you went the other way into the electronic side, and it was the infancy of that business, and I give you a lot of credit for that.
Fred, I think that we learned a lot of the basics in trading. And most important part of that aided me in my career in the electronic space was price formulation. You know, you can remember those days when a trade figure would come out and somebody would say dollar yen and 100, and you'd basically put your finger up in the air to feel which way the wind was blowing, and the broker would say 143 given last. So you'd make 141.50, 142 the figure, and you'd get given.
I remember when we were at Manufacturers Hanover, and
Yep,
I was struggling, I was having a bad couple of weeks, and I guess it was the Treasury manager in New York, I guess his title was Jim,
right.
comes over to me and said, and this had to be late 1980s. It was a Friday afternoon, and I was down, just shaking my head. And he said, he comes over as a heart to heart, puts his arm around my shoulder, which is something he never did.
Hmm.
Did you ever see Star Wars, Fred? I said, yeah, Jim, I've seen Star Wars a couple of times.
Oh
He
boy.
says, why don't you go home this weekend and watch Star Wars again? Okay, you think that'll help? Yeah, yeah, I really do. And then when you come in Monday, turn off all the voice boxes, turn off the screens, and just make the price and use the force. Use the force.
And wow, that's amazing because
But what in essence we learned in those days was, you have to have a view. I used to tell everybody on the desk, you got to have a room with a view. If you don't have a room with your view, what are you doing sitting here? You're in the front row. You
Right,
gotta you gotta have a room here, and you gotta have a view. And if you're wrong, just make the next decision and change.
right.
Well, you don't, and those were some great lessons. So in the electronic space, as I worked with the developers and trying to develop the algorithms on how to price, what do you do? We used to, I started off, Fred, using a very basic thing that you and I did on the night desk. You'd basically say, okay, the price is 45.50, and you'd say you got 25 at 45. And you remember our dollar mark trader back in those days used to
Mhm.
say, "What was that?" And I took that, and I swear, Fred, I really did. I called that the double clutch theory. So I said, you get given, wait. Just don't go out and hit the market. Wait a second, let the price define itself before we enter the market. And I think that was one of the first and most successful electronic hedgings
Yeah.
that we used. Rather than you got given at 45, just go clear everything down to 43. Wait, relax. Try to place an offer in the market.
Well, when you started by saying a room with a view, you have to have a view. I remember when I first started, early years, 1979, at SocGen. Jeff, who was the head of the desk then, still a great friend. Dollar Paris in those days, long before a euro, dollar Paris traded sometimes 30 pips wide, 50 pips wide was a normal spread.
Sure.
438, 40, 70, 438, 60, 90 was the next price. And Jeff would come in on the morning and he'd pick up the phone and his voice broker would say, Jeff, make me a dollar Paris. Sure. And the other brokers were 40, 70. He'd make 53 choice. I look at him and he'd get given and he'd look at the name, Credit Lyonnais Paris is selling. Okay. Somebody else would say, Jeff, make me a price. 48 choice. It's still, it's 30-60 now. And he'd get given, and this was BNP Paris. It's okay. I think it's going down. Now he had a view.
That's right.
Now he had a view.
Yep.
You show the market and you don't get any information. You show the inside and you find out where the real interest is.
Exactly. And then you go from there. You remember some of the guys in London would shout down, "Let's have a go."
Yep. Yep.
And that was the basic theory behind it. But we went from doing $50 million a day in my early electronic space, and we ended doing sometimes close to 200 billion or more.
Wow.
And so it was a phenomenal uh, run. I learned a lot. um, I had a tremendous amount of smart people around me. I just used, just as you just described, I just used those trading instincts that we learned
Yeah.
as to, what to do. Common sense applications.
Yeah, I mean it has stood the test of time. I don't know if you remember Paul Heffernan. Paul Heffernan was on
Yes.
the other day, and he was in the open outcry markets, the pits in Chicago, and he
Yes.
said it's the energy, the intensity that you'd feel when you look in somebody's eyes and they're saying, 20 on 50, 20 on 50, 15 on 50, 15 on 100,
Yeah.
like, all right, I guess it's
Yep.
real. And
I,
and we used
I
to work with the other guy who used to put the bids in for one when they first had iceberg orders in the market. Remember
that's
those? And
yes, I do.
just to see what's there, just to see what's in
Just
the
to see.
iceberg.
Yeah, just to let me get a little feel.
That's right, exactly.
I think we had a trading in Manihani. I think when somebody started when the vocal cords came out, he screamed at the broker so loud that somebody on the desk said, "Hey, sell 20 for me too." But you're right.
The classic story I have was on Dollar Swiss Trader at the time, Gabe. I'm doing Dollar
Yes.
Mark, and he used to cover everything against Dollar Mark and run Mark Swiss. And he says to me, Freddie, I got to sell $10 at the figure. Gabe, it's 80 offered. Then I got to sell sell 20.
Yeah. Oh boy. Classic stories. And, let's just use that simple example, Fred, and watch the way the market trades today. Today, everything is an electronic algorithm.
Yep.
Whether it's a human being going, I want to sell 10, it goes into an algorithm and goes. And if it's 80 offered when I'm trying to sell at the figure and I now have to sell 20, the computer works in microseconds at the exact same thing. Where was Nvidia? It was at 141.2. Where is it now? It's 140.8. Oh my goodness. I had to sell 100. Now I have to sell 100,000.
Right.
And that's why we get these massive spikes after news releases today, because these computers act just like the human being in
And
your example.
one of the things that Paul brought up is we had this. He was the clerk, and the paper filler was a guy named Howard Blumenthal, I think was his name. And we left stops in the market. We tried to buy. Actually, we tried to buy. He told me I have big sell stops at 90 and 80 and 70. All right, I'm a 70 bid for all of them. The market went through, traded 60, went back up. We got nothing. And I'm yelling at Paul, how can I get nothing? How can I get nothing? Let me give you Howard. So he just reiterated the story the other day. Howard comes on. I'm not responsible for stops. Like, what do you mean you're not responsible for stops? It's a fast market. I'm not responsible for stops.
Yep.
But that was the human effect, you know?
Yep. When they talk about last look in the markets, you can remember when you'd say to your broker, 20 yours, and the broker would say, I sold 10. And you'd go, who is it? And he'd come back, I'll be back.
That's right.
And for so long in my career, I'd be writing on my sheet, IBB. And I'd go in, was that New York or London?
That's right. I'll be back. Yeah.
Yep.
Those were interesting times. Some of those brokers had bigger positions than the banks, you know?
Yeah, and it's funny because I would always get into discussions toward the latter end of my career there about last look, and what is it all about, and I'd be like, well, last look really in the marketplace has always been there, right? It's always a feature of the market. Now it's just from 150 to
Quantified.
250. Yeah,
Yeah,
now it's 20 milliseconds.
right. And somebody brought up one time first look.
First,
First
okay.
look. Like, I've got 9 bids, and do you want to be first?
Yes.
Right. And
Yeah.
they tried to make that a part of the electronic market.
Yeah.
Just talking about some of the old days. I remember there was a guy at Credit Lyonnais, and one of the French franc brokers told me this. The market would be 40.70, and he'd say, "All right, make 45.75." And he's trying to go out and make calls direct. Right, call. If anybody joins my bid, hit them. Right? So, so to keep
Yeah.
the market up, all of a sudden he sells what he's got to sell direct, bid out, comes back 60, 90 below. Right?
Yeah. Yeah. I think there's a couple of key people in the commodities market that may be serving time right now.
Playing those games.
Yeah.
You're right. You're
Yeah,
right. You're right.
again, where did it learn from? That's the way the market was. Price discovery. You had to go out there and find where the price was. You use the force.
Yeah. I remember I told this story the other day too. We had a woman named Lisa on the sales desk with us, International Paper. You remember that?
Yes, I
Yeah.
remember. Yep.
And she'd say the screens were indicative screens, right? The guy wants to buy $100 million mark. The screen's offered at 90. Tell him 97. He says the screen's at 90. You look at scam. Yeah, tell him to buy it from the screen.
That's right. Yeah, yeah,
and,
exactly.
and now it's all done on the screens, so the market has really come full circle.
Definitely so true. And you remember the lunches. I can remember the first days when I briefly jumped into Mitsubishi Bank, and they had a Phoenix. The first options that all
Foreign
those beautiful.
exchange, nuclear,
Yeah,
interplanetary, something system, right?
Yep, all those beautiful colors. And I can remember one of the guys went out for the old hour and a half, 2 hour lunch and came back. And Dollar Yen did one of those Friday afternoon, four big figure drops. And he came in and yelled over to me and kind of a little slurred, "Where was Dollar Yen?" And I said, "Well, it's at 141, 142 roughly." And he said, "What? I had to buy 200 at 145." Bye.
Well, you're having a great day then.
Yeah. Oh my goodness.
Well, listen, it's been great catching up on those older stories. What do you think now? I mean, you're still having an eye on the markets, right? We've just had a big election,
Yep.
and there's a lot some divergent talks about what that means for the dollar going forward. What are your thoughts?
Well, everybody's jumping all over tariffs and then equating it back to, 2000 in 1929 and the Smoot-Hawley and how it led to global, depression. Big difference. Back in those days, United States was a primary um, seller of products to the marketplace, right? Today, we are a primary buyer of the marketplace. So you can look at it today as the buyer is standing up saying, "Hey, I don't want to be paying these prices anymore."
Right.
Tariffs
The
are a
market is what
negotiation.
the buyer will
Yeah,
allow it to be, you know?
exactly. And tariffs are a negotiating point. Sit down at the table, let's talk, look at these numbers. This isn't right. What are we going to do about it? And when the person gets up on the other side and says, "I'm not going to do anything," then you say, "Okay, I'm going to have to use this tool."
Right.
I don't think that they're going to be utilized in the fear manner that everybody's talking about. So, what does it mean for the dollar? Well, you've got I think, Fred, you and I have come through a period of time where we understand what in the 80s what deregulation means. It kind of lets loose the marketplace. In that space, then, if we look at the new administration coming in with a deregulation sort of mindset, tax cutting, allowing capital to be freer, but we parallel that with the technology boom that United States really is getting its hands around AI. Europe is falling well behind. China is being boxed out, right? You've got a number of companies now suddenly since this election saying, we're not selling those chips over there. I think TSM today, Taiwan Semiconductors, actually said that they're limiting some of the things that go to China. So the field is the US in this new, and that means investment is in the dollar. An open market, free capital is in the dollar. We used to talk about the double bang. Can you get a currency appreciation while your investment within that market also gets a positive? And I think that the dollar is setting up for that. And is anybody positioned for that? Just look at the dollar index from 100 up to 105 and change, and now it's retraced. But the sharpness of that move just shows nobody is positioned for a stronger dollar.
Well, I don't disagree with you in the longer term, but I think in the short term, they're
Hmm.
going to talk the dollar down. I think Vance has been out there. I think that's been one of the tools of Trump's ideology is a weaker dollar will help U.S. Exporters, U.S. producers, and I think they're going to jawbone it down. I don't think there's going to be intervention of anything like that. If intervention to weaken your currency always works. To support your currency never works, as we've seen, right? But I think we're going to see them talk the dollar down to get the double bang that you're talking about, to get the dollar from a much lower point, and then I think in the next year it's going to be tough sledding for the dollar. I don't think it's going to be easy, but then going forward, I think we're going to have some huge gains. I would agree.
Yeah, I wouldn't doubt. And remembering trading during Trump's first term, you know, suddenly in the electronic space, you began to hook up Twitter to trading because you needed to be the first one to respond because you
Right.
remember some of those moves.
Yep.
if they utilize social media to begin to talk the dollar down, it is. I think the one thing, Fred, that you and I are both underscoring, volatility in the currency markets is coming back, because you've got a situation here in Europe where things are getting out of hand rapidly. You just had the breakdown now of the German coalition.
Hmm.
Germany is the core of the euro. If they keep turning lower, then the engine of growth for Europe. Europe cannot have a 0.5% growth and call that, and drop the mic. You've got to have 2% growth in Europe. How are they going to do that? Now, this probably underscores what you're saying. It may happen naturally. Europe is going to have to turn to the debt markets. And they're going to have to start using the fiscal tool of basically spending money, which means capital will flow into Europe to buy into their debt. You're seeing the UK already. I mean, they're talking what? A budget of 40 trillion sterling, 40 billion sterling in tax hikes and things like that. So you've got sterling now where you're going to probably start seeing, in order for them to get their country back, them going to the debt markets as well. What I'm saying is this could attract a lot of buying of sterling and euro and selling of US as you begin to see some of the funds slosh back. But I think
Well,
that that window
we're
is
gonna
going to
do
be
a lot
very
of
short.
issuance. We're gonna do a lot of issuance as well. You know,
Whoa, wow. Uh,
yeah. So I think there's going to be it's going to start to crowd itself out. You're going to have both sides competing, and I think you're going to see back end interest rates up. You may have a pause here because it's come a long way. When the Fed first cut the first 50 basis points, I think the 10-year went up 50 or 60 basis points higher, while the short end
right,
went 50 basis points lower. And we saw
right.
another cut yesterday of 25 basis points, and I don't think the bond market initially reacted very well to that. So we're going to see a lot more issuance. I think we're going to see a lot more inflation, not only in the U.S. but globally, until some of these policies that the president-elect has been espousing, if it comes true. Another issue is what if he does cut government by 40%, 30%? You're going to see tremendous balancing of the budget, less expenditures, but you're going to see a lot of people on the streets. You know, if government has been the big employer for the last 8, 10 years, you're going to have some hard times in the U.S. as that just gets assimilates through the economy until these people start to retool.
Yeah, and what you're doing, Fred, you're underscoring probably one of my theses is that in 2029 the world is going to have a reckoning. Number one, it's the 100-year anniversary to 1929.
Yeah,
Number two, the
right.
debt levels within the world are getting to levels now that is just doesn't make sense, and you're just debasing your currency, but it's happening on a global basis. Why do we think crypto is doing what it's doing?
Hmm.
Right? I mean, people are looking of alternative forms of storage of value. And we haven't even talked really, what about China's debt levels? They say if you put it all together, they far and exceed the United States.
Really,
But it's just that you
I didn't
don't get
know
the
that.
you don't get transparent. They estimate, if you take in the local state levels within, if you saw the stimulus they just announced today, it's all about helping out all these states balance. But they talk that the China's debt could be as high as 40 to 50 trillion dollars.
Wow, I
Yeah.
didn't
So
realize that.
so debt is going to become a problem in the future. But in the interim period, I think we could see, as he has said, a incredible investment period of time throughout the world, with the U.S. leading that in the tech space. And I think that the dollar will benefit. You and I have been in a marketplace for 40 years. We've been talking dollar down, dollar down, dollar down, right? Everybody, what's your long term
Easy
view?
trade.
Dollar down.
Right. It's been the easy trade. Yeah.
So, I just look at the counter trade in this interim period of a couple of years where the dollar could get stronger. I don't know how that relates to the debt, but debt is going to be the huge negative at
Well,
some
right
point.
now, interest rate exceeds defense budget. You
Yeah,
know, what we pay in interest. What about gold? Is gold a store of value? Is that 3,000, 5,000? Is it continues to go higher?
I think it just continues to meander on higher. And, I always talk when I say gold, I always say we were on the trading desk, Fred, at nights, and we got off one of our night trading. And remember, the gold guys were right next door to us.
Hmm.
And I walked over, I forget the salesman's name. He was the big shot, he had a lot of cars at those times. And so I was into cars and I always would talk to him. And he told me, he said, let me tell you, if gold breaks $400, he said, there are more option positions that have to be covered than there is physical gold in the world. And ever since that time, I always said to myself, gold has got to be a great store of value.
Hmm.
I think that at some point in talking about the potential crises within the currency markets being debt, I think one thing we need to watch carefully is this BRIC nations. Now, they just met in Russia. They made lots of talk, but of course, getting all these nations to agree is impossible. But they want an alternative store of value. They want an alternative mechanism to create trade. We do know that many of them use the Chinese currency as a form of oil payments and things. What about if they come up with an idea down the road as a new currency and backed by gold? That is my
I
theory
think
as
that the
to,
percentage of that, the percentage of that basket, I think, is going to be backed by gold. That's
yes,
the
and
initial talk. A smaller percentage, but yes.
look at all the countries that have been buying gold, right? All the central banks. So that's my bigger theory. So I do think gold is a good store of value.
Yeah, we agree. What about the commodity currencies? Canada, Aussie?
Yeah, I mean, Canada's got issues right now. I mean, you just saw their employment numbers just came out and they didn't meet up with market expectations, which means Canada probably is going to be out there cutting again in December. They just did a 0.5% cut. That's after three, cuts of a quarter. So I look for Canada, as a Canada and Aussie, yes, as a commodity based currency. You talked about inflation going back up. Yeah, those are going to be two good currencies you want to probably hang on to and look for another currency, a weaker currency. Right now, I see it as the euro to probably be a short against. Maybe the
Mhm.
dollar isn't the dollar Canada trade. Maybe it's a CAD, short euro CAD trade.
Do you still look at more short-term trades? Do you look at some of the shorter charts? I know
Yeah,
that
I
was
do.
always, yeah,
Yeah, I still dabble in the currencies, smalls, but
yeah.
I still look, in the short term because positioning in the long term, I just don't have that flavor because the news is so headline driven, and you sit there going, for example, 2 months ago I said, I want to get long Aussie because I just think, as you just mentioned, it's a commodity based currency. China's beginning to add stimulus. Aussie would be a primary recipient of that.
Right.
But I puked out of that trade way too early because as soon as the dollar started to turn.
What I think you have to do is express those longer-term currencies, longer-term ideas with options. You
Yes.
know, buy a 20 delta, 6 month, 10 delta, even just a small position, throw something out there. I think options haven't been used properly. Both on I have option positions on in my equity portfolio all the time.
Yep.
And I'm always afraid of the 1929, the October 27th, 1987, where we're going to collapse. So I always have some 10 delta puts on, some 20 delta puts on, just so I could sleep at night. And our old friend Bruce, who I was doing it through, would say, "What are you doing?" I said, "Bruce, I need to spend this money so I could sleep at night." So I
That's right.
know I'm buying insurance. That's all I'm doing. I have
You
insurance
know,
for the house, for the car, insurance for the portfolio. That's
and
it.
bring that forward, Fred. You remember the 2008 debacle. I mean, we had friends at Lehman, and on a Wednesday they're in there, because they're all holding company shares, and then by Thursday and by Monday it's done, finished,
Yeah.
gone, put
Yeah.
kaput.
Yeah, so they lost their portfolio, they lost their jobs. Yeah.
Yeah.
I read this
So
one guy that talks about the life hedge. He says, I don't want to make money when everybody's making money. I'll stay along. He said, but when everybody's miserable and losing, I want to be okay too. I want to just be stable along. So that's his life hedge theory.
that's a perfect, my example comes out of 2008 when Warren Buffett jumped in and said, "I'm going to buy 5% of Goldman with a 5% with an option to buy another 5%." And that was the quickest $1 billion that guy ever made.
Yeah,
But, it's when you begin to see that type of stuff when everybody is, on the other side of the boat. That's what you have to look for. But those happen maybe once or twice in a lifetime.
yeah,
So you just have to be prepared, and most of us aren't prepared because we're all trying to get out.
right, right. Yeah,
So,
that's right. That's
there's a lot of good lessons that we've learned over the years. I've watched your podcast here with a few of the guys, and I tell you, they echo all the same thing: the wealth of experience. I used to say, why the heck did J.P. Morgan keep a guy like me? I worked until I was 66, and I was told, Steve, you stay with us for as long as you want. The lessons you have brought us in trading translated into the electronic space are invaluable. We don't
yeah,
want you to leave. You can stay as long as you want. But of course, you begin to start thinking and scratching your head. Do I want to do this every day, being in at 6:30, coming home at 7:30?
right.
This is crazy.
Right. But that is so true. The lessons that we learned as market makers, as risk managers through markets that were illiquid. And
Yep.
now you're going into an electronic exchange, an electronics marketplace that at its infancy was illiquid, and
Right.
it's come to be a lot more. And now they're determining liquidity. Now,
Yes.
now they're becoming the liquidity providers through the industry. So,
Right.
yeah,
And they're going to experience their problems because how many price makers or liquidity providers are there? Everybody's got automated risk management tools now. So when the news hits the line, 100 million of liquidity suddenly within a millisecond is suddenly 10 million. And the whole world goes yours, and that 10 million disappears and it's replaced with 1 million.
right.
And you're going to hit these instantaneous, and again, just look at economic releases today. Look at the 1 minute bar chart after the release. It goes from here to here in a couple of prices.
Right. Tick
Magna,
chart would be, yeah,
yeah,
looking at those tick charts are very
yep.
important. Yeah.
Magnify that to now a world event, and this is the part that baffles me with the geopolitics in the world right now, the Middle East, Ukraine and Russia, um, and the market is just basically become anesthetized to what the potential impact could be.
Yeah, I've said this many times that the market is not pricing risk properly,
No,
you know?
no, and hence your idea of options, and you're absolutely right. That is the right way. It's just before I can go into an option, I have to say, okay, I'm throwing that money away because I'm giving it to an option pricer, and
Well,
I'm going to throw it away because I probably won't make money.
well, yes or no.
Yeah,
I don't disagree because it does have value. And if
right.
you trade the volatility side of it, if you buy a 30 delta option, you're
Yep.
essentially long 30% of the underlying. So,
Right.
right? So if it becomes a 50 delta option, well, now you could sell part of it and you could capture that volatility. And then you buy when it goes down and you reestablish your hedge. You take off your hedge and you're a spot trader again. you know?
Fred, I'm looking at you talking, and I'm like immediately hearing your voice 25 years ago telling me the exact same thing. Nah, Steve, you got to do an option on that, and and you would make the same sense, and I'd look at you going, yeah, I know that makes a lot of
Right.
sense, but that's kind of like just outside of my realm, my field.
Well, listen, I know you have a short window, and I really appreciate this. I think this has been a great conversation. If you're up to it, we'll do this again many times. So whenever you're free,
Fred,
we'll catch up again.
I'd love to do this with you, Fred. I think what you and we come from a school where we want to pay it forward. We both feel very blessed about the careers that we had and how the markets have taken good care of us. how we've made our way. And if we can offer a kernel of knowledge to other people,
Yep.
that would be just awesome.
Yeah, and you just think about what you did to the I don't want to disparage people, but to the geeks at JP Morgan, right? What you brought them, I
Yep.
think it goes a long way. Well,
Yep.
listen, as I said, I know you got a short window, so I
Thanks,
really
Fred.
appreciate it, and I'll reach out next week. Okay, take
Okay,
care,
Fred.
Steve.
Yep.
Bye.
Bye.